All right, ladies and gentlemen, MrSotko here. Welcome back to the channel. Got a whole bunch of good crypto news stuff for you. And the first thing I want to talk about is Ripple to dispose stake in MoneyGram shortly after announcing end of a business relationship. And I would just say that's a tumultuous relationship because it never worked out particularly well for either one of them. Particularly says so from MoneyGram, who says they were just ended up losing money and losing reputation while using XRP. So now they need to split up, and Ripple wants to sell all of the stock of MoneyGram. So as the filed document explains, this agreement mandates Jefferies, a US-based diversified financial services company, to sell up to 8.2 million shares on behalf of Ripple. However, this plan to offload the stock, which was expected to have commenced on March 11th, is set to expire upon the earliest of September 30th, 2021. At that point, the maximum amount shall be sold, or the occurrence of certain other customary events affecting the issuer. Still, despite taking these steps to end the business relationship, Ripple did hint in a statement that this partnership might be revisited in the future, which I don't know about that one. They say, "We are both committed to revisiting our relationship in the future. We still believe in the promise of digital assets and blockchain technology to change the status quo in global payments for the benefit of billions of consumers around the world." I think they're just kind of leaving on a good note. And hey, why not? Why not leave amicably between each other? But I don't think they really have any plans to come back. After the SEC announced that it was suing Ripple Labs for allegedly violating the SEC, the U.S. Securities Act, the business relationship between MoneyGram and the fintech firm became difficult, forcing the former to take action. For instance, MoneyGram said it has faced logistical challenges in using the platform, as well as legal and reputational risks, which was basically a nice business way to say that it totally sucked. In addition, the listed money transfer organization reported revenue losses as a direct result of the suspension of its business relationship with Ripple. On the other hand, Ripple has seen its XRP tokens being delisted by some cryptocurrency exchanges as a result of the SEC lawsuit. The fintech firm is also facing more scrutiny from the SEC, and as well as another lawsuit. So not looking good for MoneyGram and Ripple splitting their ways, and then Ripple says, "Hey, screw you guys, we're going to sell all of your stock." That's basically what happened. So moving on here, social token crash after reported hack at Roll Wallet. So this is all over the place, and nobody's quite sure exactly what happened. Was this an inside job? Was this truly a hack? Or was this simply how a DAO works? And we'll get into that in just a second here. A number of social tokens or cryptocurrencies supporting online communities tanked early Sunday after a reported security breach at Roll. Tokens like Rare, Whale, Rare, Pika tanked more than 50% during the early European hours, according to data from CoinGecko. Meanwhile, the Rally token of competing social money platform Rally spiked to all-time highs. So I've never even heard of Rally. It must have went right over my head. I've never taken a look at this platform before. Like, this is literally the first day I've heard of this, when they're having this massive hack/trouble occurring. So yeah, makes sense, I guess. The founder of Whale, a social coin underpinned by a basket of NFTs, confirmed the hack on Twitter, stating that 2.17% of the coin supply has been compromised, and the rest is in cold storage. So Roll facilitates the sending and receiving of social money from Ethereum blockchain and within the Roll network. According to mycrypto.com, the malicious entity that executed the Roll hack is now sending hundreds of Ethereum to Tornado Cash, an Ethereum-based privacy tool used by hackers to cover tracks in withdrawn funds, essentially a mixer. So a lot of trouble there. And then there's this post here on the crypto Reddit that I think is a little bit better than the actual article telling it, but that was just to get us all warmed up on it. In the latest DeFi hack, a hacker slowly bought enough stake, 33%, to control true seigniorage dollars DAO voting process. Again, these are all things I haven't even heard of. I must be becoming a boomer, because I literally never heard of this particular currency and the other currencies and this platform. Certainly know what a DAO is, but these ones just snuck up on me, and the first time I'm hearing of them is a massive hack. So yeah, this is really good news. This is a good start. So the DAO voting process, thus hijacking the DAO. So was this a hack in that sense? Then proposed a new implementation in the code, and using his own stake, passed the changes, and when implementing it, he inserted a malicious code to print himself 11.8 billion of TSD coins, and then immediately dumped all of it on PancakeSwap. Thus, the price of the project went to zero. And here's their response. In the implementation, the hacker added code to mint for himself 11.8 billion TSD. Then he sold all of the tokens to PancakeSwap, which is sad. It is an attack, but it is how a decentralized DAO works. So basically what they're saying here is that they left some code open that somebody could really exploit, and then print themselves a whole bunch of tokens. So maybe you should fix that hole there. So was it a hack? Was it just clever usage of the DAO, or was it an inside job? I'm not sure we're going to know anytime soon, but if there's more information on this one, I'll let you guys know. Moving on here, Barstool's Dave Portnoy. I effed up Bitcoin. You kind of did, yeah. Barstool Sports founder and president Dave Portnoy, who rebranded himself as stocks expert Davey Day Trader, turned during the COVID-19 pandemic, bought $1 million worth of Bitcoin last August when the price was at $11,500. Then he sold it in a panic 2 weeks later when it dropped for a loss of $25,000. Now Bitcoin is above $60,000, and Portnoy said in a Saturday night Twitter video that he effed up Bitcoin because he paper-handed, a social media term on forums like Wall Street Bets for someone who nervously exits their position rather than holding on with diamond hands. He also did this with Link as well. Link was going up in price, and then it went down in price, and then he immediately sold it because he bought it to high, like something back when it was $16 or $17, and then it started dumping back down to I think $12 or something, and he sold it, and then it just went back up to $30 here. So Dave Portnoy's got some seriously paper hands. I want to congratulate all my Bitcoin people out there. Portnoy said in the video, when you're wrong, you're wrong. I effing paper-handed sold it. I effing can't take Bitcoin, the ups and downs. I wish I had it. I took all my money and I put it in what I think I know and what I can control. I don't know Bitcoin. I messed up. So, yeah, I mean, kind of, hey, but it's okay, though. You can always buy in again. What Portnoy thinks he knows is stocks. He famously made big returns by buying airline stocks early in the pandemic when they had dropped big before they later surged back. Had Portnoy held on to his Bitcoin, his $1 million stake would now be worth more than $5 million. Portnoy also had heavy holdings in Penn National Gaming, the betting company that acquired a majority stake in Barstool Sports acquired a majority stake in Barstool Sports in January 2020 and has launched Barstool branded sportsbooks apps in Pennsylvania and Illinois. So this is just a great lesson. I mean, what does it matter if one guy bought some Bitcoin and then sold it at a loss? But it's just a really good lesson to everybody. I mean, we were at 10,000. Now we're at 60,000. Are we going to go from 60,000 to 50,000 to 100,000? You don't know. Buy in, hold on for the long run. Moving on here, reported volume of top South Korean crypto exchanges surpasses that of the country's stock market. So Bitcoin, quite frankly, is starting to become pretty big. The volume of transactions in the South Korean digital currency market briefly exceeded the daily average transaction amount of the country's stock market on Sunday. According to data from CoinMarketCap, the combined 24-hour volume of major South Korea-based crypto exchanges, Upbit, Bithumb, CoinOne, and Corebit, was more than $14.6 billion on Sunday. On Friday, the same metric was roughly $14.5 billion on the Korea Composite Stock Price Index, or the KOSPI, and $10 billion on the Korean Securities Dealer Automated Quotations. The increase in volume came as the price of Bitcoin rose to a new all-time high of more than 61,000 on Saturday before dipping back under 60,000 again, which makes total sense. It should be noted that trade volumes appearing on CoinMarketCap are not always believed to be accurate due to the prevalence of volume inflation. CoinMarketCap has introduced several initiatives to combat inflated volume data, but the figures reported there are higher than what's seen on Sorry, some crypto exchanges in South Korea have experienced their share of regulatory and business-related challenges in the last year. So, again, it is CoinMarketCap, which particularly back in the day was pretty notorious for just accepting whatever data they got from whatever particular exchange. And it turns out a lot of that data was faked, and it was faked for good reasons, so that people would use those exchanges even though there was basically no actual real volume on them. Hey, and I remember reading an article on my channel probably 2-3 years ago where one guy gets paid $15,000 to purposely inflate the volume of your exchange. You just pay him, and then he basically hacks the volume up in your exchange, and then poof, he disappears. And now you have a great looking exchange that you can get listed on CoinMarketCap. But it just goes to show that it is pretty egregious, the amount of exchange going on just Korean exchanges, and the fact that it's literally higher than a nation's stock market volume for the day as well. So, hey, we're moving up there, Bitcoin. Moving on here, Bitcoin could completely replace the $5 trillion market as base layer currency, says Max Kaiser. So Bitcoin evangelist Max Kaiser, who has been right about just about everything when it comes to Bitcoin. I mean, this guy was shilling it back in like 2012, and all of his price predictions are actually pretty good. Says that Bitcoin has the potential to become the new base layer currency and replace the entire $5 trillion foreign exchange market. In an episode on the Kaiser Report, the Wall Street veteran takes note of Citibank's recent report that argues Bitcoin has an advantage in global payments due to its decentralized, deflationary, and secure nature, which are characteristics that put the flagship crypto in a position to go mainstream. And now, while Bitcoin's transaction rate is too slow for the average person to go out coffee and go buy this, that, or the other thing all of the time, it's actually quite perfect for somebody to send $1 billion at a time. In fact, it was just earlier today, I believe I read somewhere that somebody sent $1.2 trillion or billion dollars worth of Bitcoin for about a $50 fee, which seems kind of high. I mean, $50, but imagine a bank, that's simply not going to happen. They're going to want a bigger share than that, and it's going to take them all day to do that because of a lot of verifications. I mean, $1.2 billion. I mean, we're going to want to make sure that this is pretty real here, and it's probably going to take them quite a bit. So Bitcoin, way faster, regardless of its slow transaction rate. If you send $1 billion, it's going to get there in half an hour, 15 minutes, and poof, it's just going to be totally fine. Kaiser highlights that Bitcoin's advantages as a medium of exchange in global payments are already making banks, including Citibank, obsolete. It says it's happening right now because the transaction is the settlement, so you don't need Citibank. It obviates Citibank. It makes Citibank redundant, as are all banks, redundant with Bitcoin. I can trade with you as a currency, and it doesn't require any bank. It doesn't require a central bank. And I always read that in Max Kaiser's weird voice. He's such a good guy, but such a wacky voice. While the Citibank report sees Bitcoin as having evolved from a form of payment to a store of value, Kaiser believes it is the other way around. And they got it a little bit reversed. They're saying it started off as a means of payment, and people are looking at it as a store of value. But in fact, it started off as a store of value, and now it's morphing into a means of payment. That's the whole history of money. So Citibank should know at least the history of money and how money comes into existence, but nevertheless a good effort, and I applaud them for at least recognizing what they're talking, or what that they're about to go out of business. So I mean, he does have a point there in the fact that, it had to start off as a store of value as people are putting money into it and as other people are buying it. And now it's become a means of payment because at first, really, Bitcoin was very difficult to use as a means of payment. In 2009 and 2010, there were no exchanges. The very first exchange came around, I think, summer of 2010. So basically, people went to the Bitcoin Talk and Bitcoin forums, etc., and they would say, I'll give somebody, 1,000 or 10,000 Bitcoin for $50 in PayPal. And a lot of people wouldn't take them up on the offer. Nowadays, of course, you do that in a heartbeat. But people wouldn't take them up on the offer. In fact, the guy that bought the first pizzas with Bitcoin for 10,000 Bitcoin or something like that, he bought 2 Papa John's pizzas. He actually just posted on the forums. I would like to use, I'm paraphrasing here, but he basically said that on the forums that he would like to use Bitcoin as a means of payment, and he would like to get some kind of food with it that he doesn't actually have to go out and get it. He doesn't have to make the call. He just wants to give somebody Bitcoin, and then he wants nice, hot food to arrive at his house. That was basically how it happened. And a lot of people would not take him up on the offer. In fact, the forum replies on that were very slow at first, until finally someone was like, all right, I'll order you Papa John's for 10,000 Bitcoin. And they did. And that's the history of that in a nutshell. So, at first, it was hard to even use as a means of payment. So, more of a store of value, fair enough. Either way, I think it's both. But moving on here to CoinMarketCap, 1.8 trillion market cap still. So we haven't dipped too much. We did get to that 61,000 some Bitcoin, and then we pulled back, which makes total sense, as I said earlier in the video, because, we broke an all-time high. And the buying was slowing down a little bit. People were greedy, took the little slice off the top there, scalped a little bit, and brought us back down to 60,000, which is just not surprising at all. But we'll have to see where we go from here. We're going to go to 70, or we're going to go back to 50. We'll have to see in good time here. Still, most of the stimulus checks have not been received by most Americans. They are pending to most people's bank accounts. But they have not actually been deposited into the bank account. So a lot of people will probably buy Bitcoin with them, or at least some of the people will buy Bitcoin with them. Is probably a better statistical verbiage there. And we'll probably see a price increase in the stock market just from everybody going out and buying just stuff. And then we'll see a small portion of those people putting it, $1,400 or something like that into their bank account. I've already seen a whole bunch of it on various subreddits and forums that people plan to put their money into Bitcoin, which makes total sense, again, just because it is a Bitcoin Reddit or a Bitcoin forum. So, of course, people are going to say that they're going to be buying Bitcoin on it. But it is true. The first stimulus check, the $1,200 one, it brought up basically Coinbase's exactly $1,200 deposits up by like 300%. So we'll probably see an exactly $1,400 deposits go up by something like 300% on Coinbase and various other exchanges as well. But that's all I have for you guys. Make sure you like, subscribe, share this video. It helps me out a lot. And the social media down in the description below. Give me a follow if you get the opportunity to do so. And as usual, I will see you guys next time.